Hey guys, welcome back to the channel. In this video, I go over the Roundhill WeeklyPay semi-annual financial statements and show you how these ETFs are performing under the hood. As always, don't forget to smash that like button and share this video if you like this type of content so the algo guys know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, a quick disclaimer, none of this is financial advice and you should always consult a licensed professional. With that out of the way, guys, let's get into the video. All right, so the Roundhill WeeklyPay ETF series, they just released not too long ago, I think it was a couple weeks now, the semi-annual shareholder financial statements. So if you want to know how these ETFs are performing under the hood, this is going to be that video, right? Are they pillaging the NAV and then paying out those distributions? Like what is really going on? Are these ETFs actually making money? I think that is a good question to ask. And I believe this document, this semi-annual financial statement, will shed some light on that. All right. So we're not going to cover every single fund in here because some of these funds came out after June 30th. So we're not going to cover every single fund like AVGW, MSTW, and I think there's like one or two, or Google, GOOW. So we're not going to be covering those ones, but we will be covering a bulk of them. All right. So the way you get this financial statement, you can just click on any of the older ETFs. I went to PLTW because it was one of the first ones out. And then you can scroll all the way down to the bottom here and you'll see semi-annual financial statements and additional information. You can click that and it's going to give you this nice little PDF here. Okay. So this one came out June 30th, 2025. All right. Or it's at least the reporting period up until June 30th. And these are the ETFs we're going to be covering. All right. We're going to be covering the ones for Apple, Amazon, Berkshire, Coinbase, Robinhood, Meta, Netflix, NVIDIA, Palantir, and Tesla. All right. Now keep this in mind. We have to understand when each of these came out, okay? Because that will play a part in the financial statement and how these done. And I'm going to show you with the very first example, okay? But, when you download this, it's going to look a little intimidating. I'm going to be honest here. I just uploaded this straight to ChatGPT and said, hey, can you guys, go through this document, spit out a bunch of information, let me know what's going on. And, if you want to go back and actually look through this document yourself and double check its work, of course you should do that. But this is kind of the results that it gave me. All right. So just real quick, this is what it looks like. Again, a lot of numbers, a lot of stuff. It does look kind of intimidating. But this is what ChatGPT gave us. Okay. So for the Apple WeeklyPay ETF, again, the inception was February 18th, 2025. Okay. So it wasn't that long ago that this ETF came out. And then we had, Liberation Day happen. But for the total return swaps, it's actually negative by a lot. It's down $186,000 in unrealized depreciation. Okay. And that net result is negative $325,000 due to the losses on the swaps and the investments. So the takeaway here is that it is slightly a negative performance despite income. Swaps pulled the NAV lower. Okay. So this is what's happening under the hood for AAPW. But let's take a look at the full story here. Okay. So this is Apple stock. And as you guys can see, from February 18th, when this thing was launched, it's just been on a kind of a downward trajectory, right? We had Liberation Day. We had some really bad things happening in the broader market. And then all the way up until June 30th, it kind of didn't do much, right? It just kind of stayed flat. It was still down 16%. If we look past June 30th to present day, it's up 21%, 21.53%. So I predict that the next financial statement that comes out for AAPW will be much more favorable. But again, this is why you have to take into account, everything that's going on, the bigger picture. Okay. This is why you have to also look at, how things are performing after this report has been generated. Okay. But by and large, I suppose, all of these funds have actually done fairly well. Okay. So let's go back. All right. So let's look at the one for Amazon. All right. So this is the one for Amazon, came out June 17, 2025. All right. This was around the time that this report was completed. So again, it didn't have a lot of time to cook, but we see the unrealized swap gain, $28,000 in the green. The net increase, $35,000. So this was in the green. This is good. Okay. The takeaway, positive short-term result helped by favorable swap mark to market. Okay. This is those swaps that they use. If we look here on Amazon, again, it just had a little bit of time to cook. But I think the next report might be a little, we'll see. All right. It depends if Amazon can break out of this and continue trending higher. Again, Amazon is one of those, hyperscalers, along with Meta and Google. So we'll see what happens. These three companies are in an absolute arms race with each other, trying to develop the next best AI or language learning models in also competing with, basically OpenAI. So we'll see what Amazon could pull out. But I suspect, because it's Amazon, that it will continue to trend up, as things start to materialize, as they start to release, more AI based products. Okay. But, going back to the fund again, short term did really well. All right. So let's look at the next one. This one's Berkshire Hathaway. All right. Again, this was launched June 17th. So not a whole lot of data there to play with. It had about 2 weeks or 3 weeks to cook. And we could see that, the result, they're in the red by $7,200. Unrealized swap loss, $7,000. Slight loss driven by mild swap depreciation. Okay, so we could see here again, just Berkshire Hathaway wasn't really trending in the right direction, and this was, again, later in the year when Warren Buffett kind of, stepped down and announced the new CEO. So all of this is, I think, the market kind of also taking that into account. So it kind of just decreased, but we had kind of a pump with Berkshire Hathaway. So we'll see on the next report how they did. Okay. So this is, again, something to keep in the back of your mind. All right. So this is Berkshire Hathaway. You guys can, pause and take a little screenshot here if you want, but the net investment income so far was $858. Hey, that's in the green. All right. At the time, the net assets were about $1.99 million. I think it's a little more than that present day. All right. So Coinbase, this one is one of the biggest ones, the biggest top performers. Again, inception date, February 18, 2025. This is, again, very important. This is one of the older funds, had a lot of time to perform, give us some performance data. Unrealized swap gain, they're in the green, $3.57 million. All right, which is a net increase of $7.44 million. The takeaway, this is a top performer, large positive swap gain and appreciation in Coinbase exposure. And we know that because if we go to Coinbase here, we look at year to date, you guys can see for yourself, it has done really, really well. Okay. You had a large pump here in May, and then it's just really been in the green, and then another large pump all the way up until about June 30th. Okay. So we'll see how this, how Coinbase performs later. This was around the time that they got included into the S&P 500. And, that was the reason basically why Coinbase stock pumped so hard. But after June 30th, they were doing well, and then they had earnings, and it kind of just dropped. And then, we just had this recent sell-off, due to the President Trump tweet. So we'll see how Coinbase performs in the later half of this year, up to the next financial statement. All right. So again, Coinbase doing really well, one of the best performers in the WeeklyPay, ETF series. All right. So going back. All right. So let's look at another one. We have the Robinhood one. Again, this didn't have that much time to cook, but it did really, really well. Okay. Unrealized swap gain in the green, $379,000, a net increase of $380,000, positive early performance with strong swap contribution. Okay. If we look at Robinhood again, year to date, if we look at June 17th all the way up to June 30th, this was just trending all the way up. There was a lot of hype behind Robinhood around this time. And it looks like you have that kind of just that straight up and to the right trend line for Robinhood. So I suspect on the next financial statement that this will be probably one of the best funds that have come from the Roundhill WeeklyPay ETF series. All right. So going next, let's take a look at Meta. All right, so again, under the hood, how's this ETF performing for METW? We are looking good. Unrealized swap gain in the green, $45,000, which is a net increase of $55,000. Takeaway, small but positive early performance. Again, this came out June 17th, 2025. If we go to Meta, again, this didn't have a whole lot of time to cook, but I guess maybe it came out at the right time, because if you look at June 17th right here, it was kind of just trending up. It looked like it trended up almost 6%. So after this, again, Meta is one of the major hyperscalers, fighting for AI dominance, one of the companies competing for the space. So they're spending a ton of money on CapEx. Like they're spending an obscene amount of money on CapEx for data center AI related stuff. So I think next financial statement, Meta or MetW will probably be one of the better performers. We'll see, but I can't see Meta going away. I just can't. You guys can see this is like that sharp dip. If this fund had come out earlier in the year, it would have probably been almost similar to like a Palantir, which I'll get to here in a second. Okay, so let's look at the next one. We have Netflix. You guys know who Netflix is. All right, again, this came out June 17th, so not that much performance. But we had a unrealized swap gain in the green, $70,000, which is a net increase of $86,000. Takeaway, solid small scale performance driven by Netflix swap appreciation. Okay, so again, another strong performer. If we look at Netflix year to date, when the report was finalized, again, in the green, almost 10%. But afterwards, it looks like, Netflix had kind of a cool off period. We'll see what the next financial statement says. Again, I'd be very interested because this is sort of kind of trading flat right now, as you guys can see. So I'd be very interested to see how Netflix performs under the hood, for a kind of a flat market, per se. All right. So really cool stuff here. So let's look at the next one. We have NVIDIA. You guys know who NVIDIA is. Jensen Huang, godfather of AI, as a lot of people are starting to call him. Basically, NVIDIA is at the center of a lot of AI-driven stuff. You can't have AI without NVIDIA. So inception date, this fund was actually one of the first ETFs that I invested into from Roundhill. This came out February 18, 2025. And we can see it has an unrealized swap gain in the green, $2.94 million. All right. A lot. This is one of the strongest performers in this batch. All right. Result is a net increase of $3.38 million. Takeaway, strong performer benefiting from NVIDIA strength and swap appreciation. And we know that because you guys can just look here. I mean, look at that. February 18th is when it came out. We had the Liberation Day, all the tariff talk. First it was Mexico, then Canada, Mexico, China, and then the whole world, right? So ever since that time, NVIDIA has just been climbing like crazy all the way up until about June 30th is when that report stopped. So we could see really good performance here, okay? We could see really good performance, and we could still see some really strong performance as well. So we'll see how the next financial statements look like for NVDW. All right, going back here, I believe this is the last one. No, we have one more. All right, so this is the Palantir one. Again, this came out at the same time NVDW came out. This was another one I invested into. This is, again, one of the strongest funds in this whole lineup. You have net investment income, $50,000, unrealized swap gain, $7.36 million, and a result, a net increase, $8.7 million. All right, so this is doing really, really well. The takeaway here, the leader among the large funds, excellent performance due to Palantir gains and swaps. And we know that because if we go here to Palantir, all right, you guys see this. This is right around the time that, Pete Hegseth said that, they're going to start doing DOD cuts. This was around the same time Alex Karp said he was going to be selling shares. The market did not like that. Palantir took a massive dip. And then again, just continued all the way up until Liberation Day. All right. So I have held this fund for quite a while, and you guys can see here, it has been very, very rocky, absolutely rocky. But, we can see on the period ending June 30th, let's see, from February 18th all the way to June 30th, because of that, just kind of upward slope that this has, it's been doing pretty well. It's been doing really well, and that's why it's one of the leaders among the WeeklyPay funds, up 10%, just from this base. But what really sets us apart is that really strong performance on the uptrend. Okay, that is really, in my opinion, what is counting for all of those, huge gains in the ETF. All right, and as you guys can see, right after June 30th, it just continues to climb and climb even further, up an additional 31%. So I predict that the next financial statement is going to be very, very good. All right, so going back to this one, let's look at the last one. This is Tesla. All right, you love them, hate them. This is Tesla. All right, the WeeklyPay ETF TSLW. All right, we have a net investment income of $19,000. Unrealized swap gain of, in the green, $463,000, which is a net increase in $262,000 bucks. All right, the takeaway here is mild positive performance. Tesla exposure modestly up by mid-year. And if we go here to Tesla, we can see that absolutely. Counting from about February 18th when this fund was launched. Actually, was it? Yeah, February 18th when this fund was launched. We could see that it just did not perform well, obviously, right? Elon Musk got involved with the government. You know, a lot of people were torching Teslas. A lot of people were attacking the dealerships and et cetera, all the way up until about June 30th. Okay, so if we look here, June 30th, you know, it had its moments where the stock was pumped, right? Where the stock was, you know, just, you could see it here, guys. I mean, Elon Musk, you know, had an earnings call. Tesla had nothing but strong headwinds ahead of it, and yet the stock rallied. All right, so again, the Elon factor. But I predict that, you know, probably next year or the next time this report comes out, it will be very favorable. You guys can see here, up 44%. So congratulations to anyone who is in TSLW. All right, so that is pretty much it, guys. I wanted to cover this. Here's a quick, you know, summary chart for all of these ETFs. You guys can, you know, either pause and take a screenshot if you'd like. Again, I'm a big fan of the Roundhill WeeklyPay ETFs. The ETFs make up a pretty sizable position in my own portfolio. I talk about them all of the time. I'm mostly in PLTW, NVDW, MSTW, and HOOW. Of course, MSTW is the laggard between the whole batch. So just excited to see what the next, you know, financial statement is going to look like. But again, looking under the hood, these ETFs, for the most part, are making money. All right, and it's because of the underliers, you know, the underliers performance. So anyways, guys, that'll do it for me. That'll do it for this video. Hope you found it at least a little bit educational, at least got a little bit of value from it. I will see you guys in the next video. Take care.